Hey everybody, welcome back to the show. Welcome back to our weekly podcast. My name is Patrick Tan, General Counsel for ChainArgos, and with me as usual every week is Jonathan Reiter, our CEO and Chief Data Scientist. Thanks for tuning in. Thanks for joining us. This week, what we're going to talk to you about, we've got MakerDAO and Ethena Labs. That's really interesting. We'll talk a little bit more about that. John has all the dish on that. We can talk a little bit about Binance's Board of Directors. That's pretty interesting for a company that doesn't have a headquarters, so we're pretty excited to see.
Have the meetings virtually, come on.
But the composition of the board is some... for all of you conspiracy theorists out there, I think you're going to enjoy this one. Finally, we'll have some very brief comments about SBF's sentencing. He was sentenced to 25 years by a judge. In terms of, market rate for these sort of crimes, we'll just have some quick thoughts about that. Finally, we're going to go into the data of Ethena Labs. This is something you guys should really take a look at. Some of the stuff that we've uncovered is, quite frankly, fascinating. The data really stands out, really pops out at you like so much in this space, doesn't it, John? Doesn't it?
I mean, there's numbers there, and they are they tell a story.
They're hard to ignore. Okay, let's talk about MakerDAO and Ethena Labs. What's going on?
So Ethena is a new stable coin backed by offsetting long-short derivative positions that's been around for a little while. We've talked about this a couple times. So MakerDAO, which is the, I guess, largest and not oldest, but one of the oldest and certainly the largest stablecoin, crypto collateralized stablecoin protocol, is now going to admit Ethena as collateral. There's a pool they're setting up.
Okay, so and this is something that you guys have asked for. What does that mean to the people who are not familiar? What does it mean to be like a collateralized?
Okay. So in a very simple sense, the way Maker and a lot of these crypto collateralized, over collateralized stablecoins work is you go to some protocol, some program, whatever, some address, and you send it some ETH.
Yep.
Some USDC, some Bitcoin, whatever. You send it some tokens, and it will give you back 90% of that amount, 80% of the amount, whatever, value amount in their own stable coins. So in this case, it's DAI, so you'd give it $110 worth of ETH, and it'll give you back $100 worth of stable coins, $110 worth of whatever, and it gives you back $100 worth of stable coins. So there is some governance procedure that dictates what percentage haircut you take on the value deposit, what tokens are available. And in practice, everybody doesn't go to the same central contract for this. They go to sort of segregated pools so that different types of collateral can drop in value and then have collateral calls and all run somewhat separately. The system is designed so that if I give you $110 worth, you give me $100, the value drops to $40. The process that resolves that issue doesn't infect the entire system at once, at least on the first step of the price dropping. And they admit a whole bunch of different tokens, and the process is quite complicated. I'm simplifying it just because the details aren't really important, in that on some level the thing that you entered at takes the hit and has to resolve any missing value, and then there's a waterfall process that eventually ends with the governance token being issued and the whole protocol effectively socializing the loss across the whole system, and there's a whole waterfall between there. It's complicated, and there's all kinds of governance buffers and whatever. Similarly, depending on what the underlying collateral is, if it earns some kind of a yield, if it's dollars that earn interest, or you can stake some token, or whatever procedures the governance has allowed, the income from those procedures gets distributed again through some variant of this Byzantine process. So money comes in, and then it gets sent locally, and then further profits roll up to different sections of the ecosystem. So what they're doing here is they're allowing USDE into this ecosystem. Those earnings are being paid initially to stuff close to the USDC risk, and then fanned out overall because there's some amount of USDE risk that lives throughout the whole ecosystem. Traditionally, originally they were trying to just accept, ETH and other sorts of basic crypto collateral, and what most people turned out to want, instead of ETH at a 40% haircut, was USDC at a 1% haircut, to just get stable coins that weren't seizable, I guess, and then people would do stuff with that.
All right. So would you say it's kind of a big-ish deal, like a stamp of legitimacy that MakerDAO would accept.
Yeah, what's interesting. So in some sense, it's a stamp of legitimacy in terms of the size of USDE, that it's considered big enough, useful enough, stable enough, important enough to fit into this protocol. It's also funny that there is some uproar around how risk is associated with USDE. It pays a 20% yield, and we'll get into some of that stuff in a minute. We've talked about some of this before. It's risky. They don't even pretend they're definitely worth $1. They do a bunch of stuff to generate some yield, and the price might have a problem in the future. And Maker, in some sense, is getting back to its roots of running this kind of a risky mismatch where if you give me a whole bunch of Bitcoin and I give you a fraction of that value of my dollars, there's a chance the price drops and I can't stop loss them into dollars fast enough. And everybody acknowledges this now. 2 years ago, this was almost exactly 2 years ago. This was a thing that was in dispute, or at least being discussed. So it's I find it amusing that people are complaining that Maker's taking too much risk when this was Maker's original ethos was to manage this kind of risk. It does make it pretty clear that this is not some kind of a simple immutable protocol, but actually it's just a bunch of people running an investment firm. Yeah,
you're right.
Okay.
So one of the things, one of the questions I did have was if it's a question of like. And we're going to come back to that, because what it's saying is that if MakerDAO is willing to accept it, more than just an air of legitimacy, it's also suggesting that it is used somewhat, right? And this is where the data bit comes in.
I mean, is it used? So Maker's purpose was to transmogrify stuff that may or may not be useful but has value into stuff that's just dollars.
Being a Calvin and Hobbes concept.
Okay, convert. Ameliorate. No, too highbrow for this audience. Take stuff that don't make much, that isn't particularly useful, and turn it into stuff that's very useful. Turn it into dollars. Pretend it's dollars. Make it sort of workable as dollars.
Yeah.
So does that mean that USDE is actually useful, or does it mean that the yield it generates is just magic that Maker holders can keep as income? Okay, somewhere in there. It is interesting just in the in the sense that USDE is clearly a security in a U.S. domestic sense, and in a most securities laws domestic sense, because it's offsetting futures positions, and nobody disputes that futures are in the securities space in general, and that a thing that packages those up in an SPV is. So Maker is now directly saying, you could argue that USDC wasn't a security and Ether wasn't a security, and so Maker was wrapping up stuff that wasn't a security, and maybe not, whatever. But if you're wrapping up something that is clearly a security in the first place, USDE says they're not offering themselves in the United States because they're concerned about this explicitly. You kind of given up the ghost in that direction. So you're now running a investment firm that issues securities. I mean, I think we can guess how that's going to end, but okay.
All right, switching gears, we'll come back to this, and some of the points that we raised in that first point. You're going to see in the data, and the data really stands out at you. But it is consistent with the fact that MakerDAO is taking on a little bit more risk, which
is fine. I mean,
fine. That's what they're supposed to do anyway. That was
the original plan, was to convert Ether into dollars,
exactly,
by absorbing the risk.
So next, we're going to talk about Binance's board of directors. What's going on over there?
Well, I mean, I just find this amusing. So Binance has a board of directors, whatever, and as you alluded to, where's the headquarters, where the meetings happen? I guess they're online, virtual meetings, so whatever. What I find amusing is that one of the outside directors, is a Chinese, I believe, woman.
Yeah.
Who works for, and has worked for quite a while, for a Chinese private equity firm founded by Hunter Biden. Now, I think, speak for Patrick when I say this, have no idea what's really going on there at all. But this isn't the kind of thing you do if you're trying to fly below the radar screen and avoid conspiracy theories, and you're paying attention to what happens in the world. I find that very funny. I'm not saying there is something funky going on. Clearly that's a possibility, whatever. But this doesn't seem like a group of people that was careful to pick a quiet, non-headline grabbing group, because seriously, if you wanted to attract conspiracy lunatics,
this is exactly
you would do so by getting involved with Hunter Biden's Chinese PE firm. I mean, maybe they can hold their board meetings in Ukraine. Okay, this is just
Hunter Biden's Chinese PE firm throwing fentanyl into the mix, throwing Chinese conspiracy theories. This is,
if this group is trying to quiet things down and fly below the radar screen, the feedback we're providing you is you did not do a fantastic job at achieving that goal.
Either that, it's an interesting way that you're going about things. Maybe you know stuff that we don't.
Well, but because there are people who dislike stuff related to Hunter Biden, it doesn't matter what's going on there.
Yeah.
Somebody is going to sit there and find some kind of ridiculous connection, tenuous or otherwise, and this is just not. You will hear about this again because somebody somewhere is going to find something probably entertaining, whether or not it's true.
I mean, there could be no better way to get all the tinfoil hat wearing people out from the woodwork. Yeah. This is a great way.
Maybe they have a board meeting with a picture of Hillary Clinton's email server in the middle of the,
and at the pizza place.
Yeah, in the base, like it's just
in the basement of the pizza place.
This is an area populated with crazy people, and there's a lot of some. I mean, I'm sure. There's some weird stuff going on,
and I'm sure some are good people.
Yeah, there's a lot of strange conspiracy theories. The whole whatever happened there.
So just an interesting. It's an interesting way to populate your board.
Another conspiracy theory laden space that seems to have ended without any strangeness is the SBF sentencing, where he just got a relatively bog standard sentence. So hopefully, for I think we can say it, everybody's sake at this point, the U.S. justice system just processes this calmly and it's all okay, and there's no more weirdness. There was some marginal weirdness. The fact that he was out on release pre-trial and did a lot of stuff that was kind of out of bounds and still seemed to get a lot of leeway, pissed off a lot of people.
The sentence seems pretty standard.
That's pretty much exactly what Bernie Ebbers got for
something bigger.
Yeah, right? I think it was bigger.
And the recovery was nowhere near what the recovery in this case is.
That's, I think, true, although I will say, and there's been some discussion about the recovery, like people had to go out and do this recovery. Ebbers, so there's a difference between evaporating equity value, SBF's equity investors, the money's gone.
Oh, yeah, for sure.
And when you talk about WorldCom, so Bernie Ebbers was the guy that ran a large telecom accounting fraud that blew up 25-ish years ago, was also sentenced to 25 years in prison, whatever.
But I think so.
And whether the amount of equity value that blew up there was higher or lower than FTX, I'm not really sure, in part because WorldCom was a publicly traded business for a long time, so the equity value wouldn't have gone as nuts as the FTX value did in 18 months out of nowhere unlisted. That stuff can be much more volatile. And similarly, some of WorldCom's creditors and employees took it in the neck.
Yeah.
Whereas here, it's the depositors that are getting their money back, but the other investors are not getting their money back.
Well, to be fair to the other investors, I mean, that's the risk that you take with equity investments.
Oh, anyway. No, fair enough. Yeah. I'm just saying WorldCom's secured creditors didn't have serious problems.
That's true. Yeah. And to be fair, all the depositors on FTX technically categorized as unsecured creditors, right?
Yeah, so the fact that they get their money back is, now the people had to go recover it, prices have gone up, whatever. These are complicated things, but this doesn't seem like it's wildly out of line. Yeah. His claim that because everybody got their money back, there were no victims here, belies the fact that, among other things, a lot of companies go under in management, someone managed to recover most of the money, and it's still not considered a free pass. It may be the case that you don't get prosecuted till you're insolvent, right? But if you go insolvent, the fact that you manage to claw most of the money back afterwards doesn't seem to buy you. These are empirical questions. We're not saying the legal system should work that way, but in a lot of the world, it very much does.
That's known as the Kyle Davies argument, which is that companies go belly up all the time and nobody goes to prison.
Well, I mean, that argument on its face is true. There are certainly people who simply have business problems and the company goes under and nobody goes to jail. That is true. That may not be what happened in his case.
In his case,
that is a
We're
thing,
not saying that that's what happened in that case, but it's an interesting...
yes, it's funny there that the sort of the SBF stuff involved all kinds of conspiracy theories, and it seems to have ended with a pretty bog-standard outcome. Binance looked like it had the opportunity to just appoint a whole bunch of extremely standard people and recede quietly into the night of headlines because they don't want headlines. They've chosen some...
But you know what it is? Now, you think about it this way, right? If you are a somewhat reasonable person, would you want to be sitting on that board? So maybe they asked reasonable people.
I mean, but
the best person that they could find is Hunter Biden's PE firm.
Look, okay, I know, again, we have no information.
We have no information.
It's possible that they did some recruiting efforts, and this was the least ridiculous group of people they could find. You never know. I guess that tells us something. I mean,
sitting on the board of this thing, it feels like you're sitting on a hot potato.
Well, I mean, SBF's parents are presumably looking for work because they didn't go back to Stanford, so maybe they're... that would be funny. Anyway, I mean...
Till the next episode, maybe.
They still have law licenses, right? No,
they've not been disbarred. No, I don't think so. I mean, it takes a lot to get disbarred. Well, yeah. I mean, I'm assuming they
That's
sat
not
for the
a
bar
challenge.
exam.
They're law professors.
Well, no, law professors don't necessarily sit for the bar exam.
I have no idea.
Yeah.
Okay.
Well, anyway, here you go. Some data
Right,
for you. John is going to take over in a sec. Let me just reduce the size of these images, and away we go.
Okay, so this is about USDE. So let's start with, well, monthly volume is very boring. So this is unique senders and receivers per day of USDE. So you're looking at numbers in the thousands, and you can see the senders and receivers track each other pretty well. Fine. So there's some flurry of activity. I mean, relatively, it's only 2-3 times the value it is later. Flurry of activity here, and then a little bit flatter, whatever, bit of action. So that's fine. So it's a thing that's used by 500 to 1,000 unique addresses a day on average, with occasional spikes for, what are we looking at, 6 weeks or something. So, okay, this is a thing that has a non-trivial amount of usage. It's not used by millions of people, but, you know, it's used. These are the largest senders and receivers of the token. So this is just to get a sense for the breadth of that activity. I think these tables are limited to 500 people, but you can see, you know, minting is 1.8 billion, 1.4 billion, some Uniswap addresses, a lot of DeFi addresses, 1inch, whatever. And, you know, a reasonable number of addresses. This is an MEV bot. Then there's, whatever, 1inch, curve. There's a bunch of addresses in here. These tags are not the most detailed, whatever. This is just meant to show amounts. You know, and then eventually get down here to what look like smaller users. And these are big USDE holders, whatever's going on there. Fine. These are largest senders. You look at largest receivers, and it's a similar profile. There's a bunch of DeFi stuff involved. This is a staked USDE contract, whatever, that kind of thing. Fine. So one thing you might notice is that the largest sender is the minting address, right, which says no one has sent more than the minting address. Well, first of all, people may think, well, of course, because they all come out of the minting address. Yeah, but sometimes people receive and send repeatedly, whereas the minting address only sends once. That is usually near the top, but very rarely is that the largest sender, because it means no one has ever received and then sent on, you know, 2 steps more than the full amount of tokens that exist. Kind of weird. You'd expect a big Uniswap trading pool or whatnot might have received and sent the full market cap several times over. And you'll also notice that there's no, the burning address is not on here at all. It hasn't received any. The amount of burning is tiny. In fact, it may be off the bottom of the table. I don't remember where it's set to. Yeah, okay, it's in here somewhere because we found it, but we'll run a look for that in a second. So what you see here immediately is that this thing is used, look quickly, you don't see a lot of exchange names here, right? This thing is used in DeFi, and while there is volume, there's a lot of minting, essentially no burning, and not really a lot of centralized exchange activity, not a huge amount of turnover. Now, you know, turning over the full market cap in a few weeks may seem like a lot, but there's a lot of MEV bots. There's a lot of high-volume automated trading. So now let's just quickly look. These are the largest receivers that are centralized exchange wallets. You'll notice the list is super short, and there are really only 2 with real amounts and 5 that have even 7-figure amounts in the first place. So BitMEX, this was an Arthur Hayes idea to start with, so the idea that BitMEX does some is not astonishing. BitGet, 0x, Bybit, right? So there's not a tremendous amount of exchange, centralized exchange action here. It's almost all DeFi curve pool type things, which maybe makes you question the amount of real organic activity that's going on. Okay, and now, again, recall a lot of minting, essentially no burning. So let's look at the largest burn transactions. There are only 29 total burn transactions at all, and I think it's fair to say at least 20 of them are either tests or just irrelevantly small. This isn't by date, this isn't bucketed by month or anything like that. These are the hashes of all of the burn transactions, and these are the amounts. So there's 2 million, 1.5 million, 1 million, 200,000, and then just shrapnel. So this is really a product that is minted, pays a 20% yield, 30% yield, whatever, pays a high yield from some structure, is used as collateral for other stablecoin production, and no one ever seems to return, and the amount that it gets traded around back and forth isn't huge. We can run comparative analysis on DAI, USDC, whatever, and you see extremely high volume. So you remember looking at largest users of USDC, we found wallets that during volatile times were sending and receiving hundreds of billions.
Like Symbolic Capital.
Yeah, it's larger market maker, MEV bot type stuff. It wasn't hard to find people who transacted more than the total market cap of the token. And the total market cap of the token was tens of billions of dollars, whereas here we're talking about on the order of $1.5 billion. So, I don't know. This is the thing that people purchase and that pays a yield and that no one ever cashes in. Those are characteristics common with types of investment schemes that are not ideal, right? Remember that the yield that it pays has to be paid in token.
Yeah.
So if everyone just mints this thing, occasionally trades it around in DeFi, and then expects via staking it generate more tokens, those tokens have to come from somewhere, and it's not clear where the inflows are if there's no life cycle of these things. You can't just mint tokens and have them magically pay you a yield. That's likely to end poorly and shares some characteristics with Ponzi schemes. We're not saying this is a Ponzi scheme. We're saying Ponzi schemes are classically things where people put money in, buy an asset, and experience a massive yield, but never actually encash it. This looks a lot like one of those systems, and people are going to have to start to ask themselves it's not just where does the yield come from, but look at the cash flows. No one redeems this thing. Where are the additional USDE going to come from if they don't come from new people buying USDE, right? Because there isn't a life cycle here. There's a one-way process. They get minted, they get sent somewhere off in the staking contract.
And then they get...
You got to get more to pay the yield. If there's 100 of them in there, you need 20 to pay 20% yield.
So to pay the yield, and nothing seems to get burned.
Somebody's going to have to go buy them. Nothing gets burned. Yeah, there's no life cycle utility. So there is certainly, at the moment, what you'd call in macroeconomics, there's a large current account surplus here. Money's flowing in one direction. If that money doesn't flow in, it is extremely unclear how, absent any use of this thing, it's not... So centralized exchanges have dollars, right? Uniswap doesn't have any dollars, right? So you can trade this thing through Curve and Uniswap, but that's not going to generate more dollars to pay this yield. I know that fees are supposed to be created from something around the procedure, but there is no... If the process that's paying fees, that's paying this yield, is people minting the thing, well, you're at $1.5 billion. So your yield is being paid out of incremental minting fees. Unless you think minting will run forever, this is going to reach a point where the amount required to pay fees to cover the yield can't come from new investors anymore because there aren't enough new investors. And that's precisely how those kinds of schemes end. So I think people need to find some utility for USDE, or you're going to see a line that goes straight up until the inflows are insufficient and then just goes to zero, right? Which is kind of reminiscent to what happened with UST. Yeah.
Well, they can always have a Ethena Labs guard foundation.
Well, I mean, actually, I'll be kind to Luna and UST for a while. There was a blockchain there, and if the argument was there's activity on the Luna blockchain that generates activity, people put money in, they get utility out of it, whatever. It turned out in the end that wasn't enough money, right? But there was a bunch of utility there. If you look at what this thing is used for empirically, there is no other ecosystem you can point to that's generating a bunch of fees. The fees are coming from the minting of the thing. If the yield is paid from fees collected from the minting of the thing, like that's not an argument that makes any sense. There's no sustainable flow there. In the case of Luna, it wasn't enough that there was a blockchain and payments that ran, but at least that was a thing you could point to that plausibly might generate some income. I don't see how that's going to happen here. I did not expect that the amount of burning would be this low, right? That it's really a one-way train, mint and hold.
So you asked me like how many wallets transact on a daily basis, and I was surprised by how low that was.
Yeah, 500 is the most common number. That's pretty low.
That seems pretty low.
And no one's ever burned it. Okay, when the inflows stop, when people try to actually collect their yield, this better change structure, or this is going to end hard and fast.
All right. And on that note, thanks for tuning in.
I should say, it's nice that they're not so Do Kwon lied about the utility of that underlying blockchain.
Okay.
So it's nice that they're not pointing to a machine to generate fees that's complete horse shit, right? It's nice that they're being honest about it. So I'd compliment that. I would just say people should be concerned that there isn't even a fake source of income here. It
is what it is.
Yeah.
So on that note, thanks for tuning in. Thanks for watching. If you're tuning in to us from Spotify, thanks for listening. Keep your comments, likes, and subscribes coming in. We tried our best to make sure that we put in a little subtitles, like closed captions, in the sense that we'll explain certain terms and stuff like that for people who are less familiar. We're not yet at that stage where we're going to be providing closed captioning for the videos.
Can we not get that like for free?
No, we can. We can
provide this for us?
Yeah, we'll use AI. That's what the AI and ChainArgos is for. So, till next week. We'll see you. Have a great weekend and talk to you soon. Bye-bye.